What is going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to the channel and welcome to today's episode, which we're going to be covering strategy hopping. This is probably one of the most common errors in the trading industry because people aren't patient enough to either let their edge play out or be patient enough to see that the style that they've chosen actually has a statistical edge. So what they do is they sit on Instagram, they sit on YouTube, and they've traded 100 different strategies and they've got opinions about how none of them work, which actually is not true. In this video, we're going to debunk the strategy hopping trap. I'm going to explain some few things that I've learned along my journey about why sometimes more equals less, right? And therefore, if you can define a strategy for yourself, build a system around it, and give that sample size enough time to play out. Give yourself enough data to get a sample size and let that edge play out. So in this video, we're going to debunk the strategy hopping trap. Let's get straight into it. Now, the next strategy is never the answer. Most traders, probably more than 5. Most traders have tried 5 strategies in the last year, probably more, right? ICT, smart money concepts, fair value gaps, rejection blocks, break and retest, order flow, blah, 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 right? None of them work long enough to find out if you've actually got an edge or not. So people move on. So you try a different one, right? YouTube, whatever, another Discord group. This will keep happening until you realize what the real problem is. And the real problem is not you hopping around trying to find different strategy. Strategy hopping looks like 3 broken trades. The strategy must be broken. Let me change it. I've had a couple of losses. My strategy's broken. I've got to do something different. So you go looking for another one. New YouTube, new Discord, etc., etc. You find something that looks a little bit better, right? Oh, I've seen a guy in the Discord posting a big profit and loss statement. Cool. 3 more losing trades, rinse and repeat. Same process, same cycle starts all over again. You're not actually testing strategies. You're just avoiding the accountability of realizing that you're the problem. If you're the problem, then you're also the solution. It's not the strategy. The common variable in all of these failed strategies is you. You're the issue. If you can be self-aware enough to say that I have a problem and I'm also the reason that that problem exists, that means I'm also the solution to that problem. If you can have enough self-awareness to see that, that will make your trading journey much easier for you because you'll have a level of accountability that most people don't have. No strategy, doesn't matter what it is, what time frame, works without the operator. Every single strategy has losing periods. It can have very long losing periods. That can be very difficult. That can be very psychologically tough to handle when you have a large losing streak. I said it in the last video. The largest amount of trades I ever took, which were all losses, was 11 in a row. I think it was January 2020 or somewhere in that region. I took 11 losses in a row and I was risking 1% of my account trading FX and I was down 11%. That was tough on my trading psychology. I started to doubt myself. I considered strategy hopping, all of the things I'm talking about on this video. That comes up when you take 11 losses in a row. That came up for me. Every single trader goes through that at some point. If you haven't gone through it yet, you're going to go through it eventually. The traders who come out the other side of that profitable are not the ones with the best strategy. They are the ones who stayed consistent long enough to let your edge play out. You have to play the long game. If you over risk, you can't play the long game. If you strategy hop, you can't play the long game. If you change your management every second trade, you can't play the long game. You have to stay consistent long enough to let your edge play out. Why drawdown is the trigger point? Every single strategy goes through periods of drawdown. I just said it, 11% for me. 11 losing trades in a row. Drawdown feels like a failure because it's another one and another one. And then you get to 4 and it's, I've taken 5 in a row. Then you get to 10. And then the self-doubt really starts to come to the surface. It happens. It's actually just variance. Most traders will quit before your strategy has the chance to recover. And this is why they don't succeed. They don't see the edge because you don't stay long enough for the edge to play out. Now, I can give you an example of this from my own life experience. After that losing period, pretty sure it was the beginning of 2020, I went on to have what can only be described as the greatest trading run for about 18 months of my entire life. Made enough money to quit my full-time job, bought an expensive car that I probably didn't need. I basically caught every single move in FX and in crypto that I had time to catch. And I went on a generational run. Right after, I almost gave up and changed my strategy because I took 11 losses in a row. Thorough journal audit, etc., etc. Did all the right things. but I had to stay long enough to enable my edge to play out. Jumping ship during drawdown locks in your loss. Think about that for a second. If you take 5 losses in a row and you go, oh, it's the strategy, let me change it, and you change your strategy, then how can you recover from those losses? You're basically hoping to come across a new profitable strategy, a more profitable strategy to make back the losses that you've now crystallized from the existing strategy that you've just given up on. It resets your clock. You don't get the chance to prove your edge. You need more trades than you think you do. 10 trades tells you virtually nothing about your edge. People are like, oh, you've got to go and back test 1,000 trades. Back testing is great, but forward testing and live testing is also really good. And forward testing and live testing doesn't include 5 trades. It includes like 55 trades or maybe 100 trades, depending on how frequently you're trading, right? You probably need 50 minimum. 100 trades would be ideal. A strategy with a 55% win rate can lose 8 in a row. That's not strategy breaking. That's statistics. That's just the nature of the game. If you know your numbers, you'll know that a 55% strike rate equates to potentially taking 8 losses in a row. Most traders will not get to 8. Strategy hop at 4, change something at 5, give up and sabotage at 6. You don't allow your edge time to play out because they hop at 5, 6, whatever, 7. Buying another course is normally not the fix. More information is not the problem. Most losing traders already know enough to be profitable. Most of the time, you potentially have the tools in your toolkit to be profitable. The question is why not? Why aren't you profitable yet? There's a gap, and that gap is your execution gap. And execution, I keep saying it time and time again, comes from discipline. Your ability to execute as a trader comes from discipline, not from a new set of rules, not from a shiny new strategy, from discipline. How to break the strategy hopping cycle? Pretty easy. Pick a strategy. Document the rules completely. I'm not talking about in the back of your mind or on the back of your cigarette packet. I'm talking about a laminated copy of your trading plan, written on your desk. I'm talking about one on your phone. I'm talking about one on the computer at work if you're working full time. That's what I did. I had 3 copies. One on my phone, one at the work computer, and one on my desk at home. Write it down. Be clear. Be specific. Commit to a minimum of 60 trades before any review. Ideally, probably 6 months. 6 to 12 months of trading before you review and change anything. No changes during that period. All you do is execute your plan. Day in, day out, rinse and repeat, boring. Boring is good. Journal every single trade with your reasoning at the time. Keep a log of your trades. If you've watched it to the end of this video and you've watched this far, I have a journaling software that I give to all the members inside QT. If you watch this and you join QT, DM me on Circle and I will send you my journal and you can use my journal. So you have no excuse about journaling your trades. Your average P&L, your strike rate, how you're going in terms of following your trading plan. Are you over trading, under trading? We have a journaling software. So not journaling is not a good enough excuse. Journal your trades with your reasoning. The data will tell you what to change, what to adjust. Your instincts or your friend or Instagram will not tell you what to adjust. Well, it will, but it's not the correct advice. What does it look like when you stop strategy hopping? Well, you stop looking for new strategies. You refine one. I currently trade 2 strategies, and I have traded these strategies for the last, I don't even know how long, maybe 3 to 5 years now. I traded a set of strategies when I first learned to trade. Then I started amassing quite a lot of new information about trading. So I tweaked and refined them a little bit. Then I reduced it because I was trading 5. Now I trade 2. Those 2 are kind of a hybrid variation of what I learned here, bundled with some new insights that I've accumulated over the last few years. That's it. 2 strategies. Don't trade anything else. Not interested in anything else. I trade 2 different strategies. They're kind of interchangeable anyway. That's my jam. You stop looking for new strategies. You refine your current approach. Refining comes from data. Doesn't come from YouTube. Doesn't come from somebody on Instagram. Your data, which is specific to you. What happens then is you start to recognize your setups before they fully form. You start to be able to look at the daily chart and know what's happening on a 1 hour or a 4 hour time frame before it occurs, because you're just realizing that the charts are fractal in nature. It's a little golden nugget there if you understand what that means. Your results then become boring, but they become consistent and they become predictable, which is good. You don't want your emotional fluctuations to be doing this. You want your emotional fluctuations to be consistent, predictable, and profitable. That's the goal. Boring and profitable beats exciting and broke. The mechanical approach ends the cycle. Mechanical rules remove the emotional decision to quit. If the rules say trade, you trade. If the rules say don't trade, then you wait. You be patient. You stop second guessing because the process does the thinking for you. A documented process. Discretion is where strategy hopping lives. We need to remove discretion, or we need to remove as much discretion as possible. And if you're watching this video and you're a bit green, start on the no discretion at all and work your way towards a little bit, like 5% tops. One strategy, clear rules, enough trades, review the data. That's the formula. That is the cheat code. Keep it simple. Keep your rules clearly defined and keep them documented. Get enough trades to build a sample size. Audit your performance. Journal all the entries. Journal your thought process. Review it. Consider the data and treat your trading business like a full-time business. Audit your trading business. That's the formula. It's not complicated. It's actually very easy. If you're ready to stop strategy hopping and starting a new strategy every single month, Quantum Traders, my mechanical trading community, a clear framework built for consistent execution. You guys and girls know I have been banging on about this for a while now. It's got nothing to do with the next strategy, the next indicator, the new Discord group. It's about refining your approach so that it works for you, your lifestyle, your goals. Inside QT, we're covering crypto, covering equities, covering metals. We are about to go. Mark my words. Disclaimer, this is not financial advice. We are about to go into an interesting time. I'm careful with my words here. In the cryptocurrency markets. There is some signs and some writing on the wall that we are going to have opportunities within the cryptocurrency markets in the second half of this year. If there was a time for you to get your finger out and start locking in, it is right now. Because the cryptocurrency markets, when they decide to give us some additional opportunities beyond what's currently presenting itself, there is going to be a plethora of things to look at in the crypto markets. We're covering it already. We've been talking about it inside QT for the last few weeks now. Risk management that keeps you in the game. Disciplined risk management, capped position sizing, journaling your trades, all the things that you should be doing if you're planning on treating your trading like a full-time business because you have the goal of turning it into one. If that's you, Quantum Traders. We've got a subscription, community, webinars. We've got one-to-one coaching available if you want to go down the rabbit hole and get stuck there. As always, I put all the links in the description of this video. Somewhere down here, there will be a link to join us. If you're watching this and you're struggling with your trading and you can't figure it out, I've told you. The strategy was never the problem. You just never gave it long enough to find out. Keep it mechanical. You guys and girls take care. Have a wonderful week ahead. Happy trading, and I will see you in the next video. Take care.